Are electric vehicles on track to dominate the roads, or is the industry entering the slow lane? A new report out by the International Energy Agency paints a rosy picture of the industry, predicting that 1 in 5 cars sold worldwide this year will be a battery or a hybrid vehicle. But the most recent quarterly figures tell a slightly less optimistic story, with major manufacturers, including Tesla and BYD, posting weaker than expected sales. To unpack all this, I'm joined now by Gregor Sebastian, Senior Analyst at Rhodium Group. Gregor, based on the trends you've been observing, is the International Energy Agency right to be so optimistic about the direction of the EV industry?
Yeah, thanks for having me. I mean, forecasts are always difficult, right? Especially in a market like the EV market, which is heavily influenced by new technologies emerging, raw materials like lithium that influence the price of the battery, and obviously also politics and especially purchasing subsidies. And we've seen that in Germany, right, where the purchasing subsidy regime was abruptly pulled at the end of last year. I still think, though, that the IEA report probably paints a relatively realistic picture. I mean, if you just look at the sales growth in the China market, you can already see that growth is actually very much in line with what the IEA is expecting, and also the global figures are very much in line with their forecast for the rest of the year.
Yeah, so those quarterly figures really have to be put in context, don't they? Let's take a closer look at them and the industry's big players. In the first quarter of this year, Tesla was the top runner in the world, selling around 387,000 vehicles and retaking the top spot from China's BYD. But both of these companies actually saw a decline in sales in the first 3 months of 2024. Was this a blip, would you say, or are consumers losing interest in buying electric?
I don't think they're necessarily losing interest in buying electric, although there will be certain markets, especially in Europe, right? I don't think that, for instance, the German market will see strong growth this year, are declining. But overall, I think consumers are shifting to electric, right? We will see less growth than last year, but I think there will still be significant growth. Looking at the two companies that you mentioned, I think for BYD, it's really a story of other Chinese competitors, especially models backed and equipped by Huawei, the Chinese telecoms giant, are really eating into BYD sales. But that doesn't mean that the Chinese EV sales market isn't growing rapidly. And for Tesla, it's in a way a similar story, right? Sales have been slower across the board, especially because competition is ramping up. But it's not necessarily indicative that because these two companies are growing slower, or in some phases even see declines in sales, that the EV evolution or revolution is completely overboard. What we're seeing is that the market is really maturing, right? Instead of just looking at 2 players, we now have to watch 10 or even 20 companies.
Yeah, and I'm wondering whether there's actually going to be an increasing market for used EV vehicles. Are we seeing that at all yet?
Well, I think looking at used EV models, right, I mean, the prices have declined rapidly, partly because buyers are worried about declining performance in batteries, right? So I think in Germany or even the European market overall, second-hand EV prices have actually come down below second-hand ICE model prices. So I think that is in a way a worrying trend if you want to have a high resale value. It can, however, also then drive EV adoption if we have more cheaper second-hand vehicles available for buyers.
Interesting. Now, there is a major industry event taking place in Beijing right now, Auto China. It's the country's largest car show, and all the big car makers, bar Tesla, actually are there. One company is making a lot of headlines, the Chinese smartphone and home appliance maker Xiaomi. It's launched its own sporty electric car, the Su7, and crucially, it's offering it at a lower price than Tesla's Model 3. How significant is Xiaomi's arrival on the scene, both within and potentially outside of China?
Yeah, I mean, we should definitely not underestimate the arrival of Xiaomi, right? It's really interesting also to compare how well Xiaomi seems to be doing, right? And still early days, right? In comparison to Apple, right, which recently pulled its car project, and both obviously smartphone manufacturers. And Xiaomi had a lot of orders come in, right? They have a long backlog of orders, which will also mean that it will be a while before we see Xiaomi going for overseas markets, because at the moment there's just so much pent-up demand for their vehicle in China that it will be a while before the company actually has production capacity available to also serve customers in Europe or across other markets. But it's really indicative of trends that we're seeing in China, right? The whole industry, I mean, starting with a company like BYD that actually also started as a supplier in the smartphone and battery business. It's a lot of kind of these entanglement between electronics companies and now car industry, right? And we're seeing also Western companies trying to tap into that electronics know-how, faster development cycles, and also new digital features. And I think China is really the lead market, not only when it comes to EVs, but also when it comes to these new technologies.
What were the problems that Apple encountered in its attempt?
Well, I think it's hard to pinpoint just one factor, right? Obviously, entering the automotive business is extremely capital intensive. And if you look at Apple's previous or current business model, right, they're actually outsourcing a lot of the manufacturing to suppliers like Foxconn. So I think there might have been a worry on Apple's part that they're basically taking on too much, and that the car business would also reduce their margins, which are much, much higher for their smartphone and software and services enabled business model. Obviously, it's always a gamble, right? Also for Xiaomi to enter this business. I think they have also been saying that profits are initially very low, if not, negative. And they're hoping that with scale and over time, car models are going to become profitable and also then drive further adoption of their smartphones, right? So they're kind of trying to build a similar ecosystem that the likes of Amazon, that the likes of Apple have also built, kind of trying to lure the consumer into a whole ecosystem of different products. And cars are one of those.
Now, European car makers are also trying very hard to gain a foothold in the Chinese EV market. What kind of offerings are they presenting right now, and what are their chances of luring consumers away from the likes of BYD and Tesla?
Yeah, so I mean, we've seen a very strong showing of German car makers, especially in the auto show. Less so maybe from the French car makers or Italian car makers, but the German car makers are really trying to double down on the China market. They see basically that the China market is the only way for their survival, because so much of their sales and profits depend on the market. And a company like Volkswagen actually has some really interesting sales and profit figures. What they're now targeting is to basically regain a position that they had a couple of years ago. What they're trying to do is basically tap into local expertise and know-how. They've entered a lot of corporations with other EV makers, Xiaopeng, for instance, where they've bought a minority share. They've also entered cooperation with battery makers and autonomous driving chip makers in China in a bid to launch new models that are going to resonate much better with Chinese consumers, because their current ID e-vehicle lineup is not really a sales driver in China. It's loss-making, and sales numbers are subpar compared to main competitors like BYD.
I want to stay with Volkswagen because another issue I want to touch on is a recent investigation by German media that appears to link China to a huge hack of Volkswagen that took place over years, beginning in 2010. Data related to EV innovation was allegedly among the hackers' targets. To what extent is the theft of intellectual property a potential part of China's EV success story? And how is this issue being discussed among industry insiders?
Yeah, I mean, I think China's EV success is down to many factors, right? It's related to subsidies. I'm sure it's also related to using IP of other companies. And it's also due to genuine entrepreneurial and dynamic competitive forces on the ground. I wouldn't overrate, the kind of factor of the IP theft in that specific case, because ultimately, I think when this kind of theft was ongoing, Volkswagen was not really a leader in EV technology, right? So, and I don't think what we're currently seeing on the Chinese market is closely modeled on Volkswagen technology. However, I don't have the details, right? I haven't seen the actual data, so it's hard for me to assess on the outside. But this is obviously something that affects a lot of German and European and other Western companies. And I think especially in sectors like machinery, where China is actually still lagging behind. IP theft is also one of the many tools that Chinese companies, sometimes supported by the government, are using to catch up with foreign rivals and competitors.
That makes sense. And right now, the Chinese EV market is by far the biggest in the world, far outpacing Europe and the US. And as you mentioned, that growth has been fueled by massive state subsidization from raw materials right through to production. The EU is considering imposing punitive tariffs of around 15% in response. What impact could that have on electric car sales in the bloc?
Yeah, so we are also fully expecting that the EU is going to place provisional duties in the upcoming weeks before the summer on Chinese EV imports. And it could have a range of effects. Well, first of all, it's going to increase costs on the part of China-based producers if they want to continue to export to the European market. Some of them might decide, this is not for us anymore. The costs are basically too high. So there will be a decrease of imports going into Europe. For consumers, that could also mean, obviously, that there's less choice and that prices comparatively might rise. On the other hand, it might benefit European-based industry because they are now not faced with as much competition, which was potentially subsidized by the Chinese government, as the report will hopefully show. And additionally, we might over time, and this is obviously going to take a few years, see more Chinese car makers in a bid to still access the European market, set up production facilities, right? And we've seen in recent weeks several announcements made by companies like Chery and BYD.
Yeah, because the US with its Inflation Reduction Act and the EU with its new industrial deal, they are trying to play catch up, supporting domestic production in the area of electric mobility. Are we entering an EV subsidy race? And if we are, is this a good or a bad thing for innovation?
To a certain degree, we've been in a subsidy race for a while, and I think China's been winning it because they've just started a lot earlier than we have, right? I think in Europe, one of our issues is that our subsidies are, well, first of all, they're coming in late, right? We've only really started to subsidize the EV industry in around 2018, 2019, when batteries were declared an important project of common European interest. And subsidies are really primarily focused on the battery and EVs themselves, versus China, which has really taken a whole of supply chain approach, looking at raw materials and electrical components, literally everything that's going into a car. What that means for consumers, I mean, it can obviously be beneficial if subsidies help drive down prices, especially if we're looking at demand fueling subsidies like in the IRA. However, some of those subsidies are ultimately also targeted to deny competition from players from China, or what China has been trying to do for years is basically keep foreign competition out as well. And that ultimately is bad for competition and means that not always the best product is available for the lowest price to consumers in each market.
Now, China, Europe and the US are the biggest markets for EVs for now, representing about 95% of global sales. But I'm wondering about potential growth in other markets like India, for example.
Yeah, I mean, India is going to be a really interesting market to watch, right? It actually recently overtook Germany and is, I think, now when you look on it at a per country basis, I think the third or fourth biggest market after the US and Japan. So it's a really important market. And obviously it has strong growth potential, especially compared to the more advanced economies where EVs are basically going to replace rather than add rather than add new sales, right? They're replacing ICEs, so internal combustion engine vehicles, rather than adding new sales. In India, we're going to see genuine new growth in passenger vehicles. One key problem for Indian consumers at the moment, well, first of all, EVs are way too expensive for most of them, right? So India has been driving a lot of demand in two-wheelers or three-wheelers, but cars with four wheels have been lagging behind because prices are very high. Another issue for India is that it doesn't really have a strong battery industry, and at the same time, due to political differences with China, there's been a border conflict over the last few years. They are also taking a very defensive approach and protectionist approach towards Chinese investment in imports. Which means that Chinese car makers are going to have a more difficult time penetrating that market. And ultimately, it's going to be Chinese model for the foreseeable future that are driving low-priced EV adoption. Same for battery makers, right? At the moment, there's not really a way around Chinese cathode and anode producers. So that's really severe roadblocks for the Indian EV industry at the moment. But I'm sure that there's going to be continued growth. I think actually we mentioned Tesla before, right? The current layoffs that Tesla has been announcing could also be another roadblock that India is facing, right? Because the Modi government has been trying to lure in a Tesla plant, also through adding a new subsidy scheme. But ultimately, all of those plans are currently up in the air, right? Because Tesla is trying to cut costs, and whether they're going to spend a couple of billion US dollars on a new plant in India is really up in the air.
There are a lot of moving parts, aren't there? Gregor Sebastian, Senior Analyst at Rhodium Group, thank you so much.
Thank you so much.